So I think we're live on air. Very good afternoon and welcome to Crossing Borders, the new IMC streaming service aimed to bring the investment migration industry together in these uncertain times where everybody is, for the most part, working from home. If you watched and participated yesterday, please remember to follow our Twitter and LinkedIn pages where we publish all the broadcasts that we have on a weekly basis. That's every Wednesday and Thursday at 2:30 Central European time. So in today's broadcast, I'm delighted to welcome and introduce Dr. Juerg Steffen, who's the Chief Executive Officer of Henley and Partners, a global citizenship and residency planning firm based in Switzerland. Juerg has many years of experience, in fact, in advising high net worth individuals and their families across the banking, wealth management, and family office space, and of course now in the investment migration space. I'm sure that many of you have already crossed with Juerg at one of the conferences on the conference circuit globally in the past few years. So Juerg, I'm going to hand over the presentation to you, but first, could you provide us and the audience with an overview of what you're going to be talking about today, please?
Yes, a pleasure. Good afternoon, Bruno. So we are talking about investment migration, a new asset class for high net worth individuals. So about the concept of to see investment migration as an asset class.
All right, perfect. So Juerg, I'm going to hand the presentation over to you.
Thank you, Bruno. So I try to open the first slide. Mm-hmm. Okay.
So here we are.
Here we are, and now show my screen. Okay. Can you see the slide now, Bruno?
Absolutely. Yeah, that's perfect, Juerg. Over to you.
Okay. Good afternoon and hello to you all. No matter what time of day it actually is where you are watching this IMC webinar. We are, of course, all aware of the extremely challenging situation that we face today and for the near future. The COVID-19 pandemic will have profound socio-economic consequences that will affect our industry. However, we believe that we are uniquely positioned to provide support to both sovereign states and our private client base, as investment migration can be seen as a major risk and volatility management tool. This will be the core of my brief presentation this afternoon. As we enter the year, investment migration is increasingly being included as a core component of wealth management strategies around the world. The premise of which the investment migration industry is built, that sovereign states can leverage their residence and citizenship rights to attract crucial foreign direct investment, holds true for individual investors who are able to expand their business operations and extend market reach, secure greater global influence and opportunities, and shore up some of the risk inherent in traditional asset allocation. We go to the next page. We all know that residence and citizenship by investment programs offer individuals the opportunity to invest a preset sum into the economy of a country of their choice. Historically, this investment has been made to ensure enhanced global mobility. They have also been seen as marketed as status symbols of significant wealth. These obvious benefits and sales channels remain, but I believe we have entered a new phase of how investment migration products and our industry as a whole can be perceived. Traditional wealth management and asset allocation strategies involve the creation of a portfolio comprised of well-known and understood asset classes. For example, equities, bonds, commodities, futures, real estate, or any other capital market-based instruments. However, increasingly, strategic investors appreciate that investment migration represents a value proposition that is both fundamentally different from traditional forms of investment, yet is equally important. We argue, based on our long history in the industry, combined with the fact that many of our current employees have significant experience in wealth management and banking, that investment migration should take its place with equities, debt, currencies, commodities, and real estate as asset classes within the standard wealth management portfolio. In the first few weeks of 2020 alone, the world has witnessed the outbreak of the coronavirus in China and therewith the global sell-off of equities. The full effects of what is now a global pandemic remain to be seen. However, it has led to a fundamental restructuring of many of our lives, not least me giving this webinar, and of course the effect on the global economy has been significant. We must assume there are more fundamental issues to manage in the future. Volatility will not disappear once we are allowed out of lockdown. China, with an economy that is in the center of contemporary global trade and the largest trader of merchandise in the world, is already feeling the strain. Small and medium-sized businesses that operate on short-term contracts and have limited financial and physical reserves are particularly vulnerable. Last year, China's economy grew by just 6%, which was the lowest rate in almost 30 years, and a significant drop-off from the 10.2% achieved in 2010. If the coronavirus is not brought under control quickly, there is a genuine risk. China growth could fall below 5% or even give way to economic contraction. The response to turbulences on the global markets is frequently to look towards safe haven investments such as precious metals, traditionally sound investment thinking to be sure. However, while we saw many investors opt for gold to hedge their exposure to stock market volatility in the wake of the 2008 financial crisis, wealth managers today are encouraging their clients to consider investing in alternative options. These options may have included either specific defensive stocks or even indices that over the long term have shown net growth. Now, however, the smart wealth planners should advise that the client considers citizenship and/or residence as even wider-reaching fail-safe in the face of global volatility. It is universally accepted that a solid investment portfolio aims to maximize returns while minimizing exposure to risk. In the realm of finance, this might mean spreading one's available capital across a variety of financial products. In times of significant volatility, there is often a move towards safe haven assets, gold, utility stock, indices, or even the greenback. When it comes to citizenship, the machinery may be different, but the model is the same. We are all allocated a citizenship at birth, but it is truly a birthright lottery as to whether that citizenship is going to be a help or a hindrance to us throughout the rest of our lives. Those of us fortunate enough to be born with a high quality citizenship that enables us to access significant opportunities within and beyond our countries of birth are less exposed to risk than those who are born with citizenship of relatively low quality. However, the truth is that whatever passport one is entitled to at birth, having multiple citizenships dramatically reduces one's exposure to political and economic risk and significantly increases one's access to both financial and personal opportunities. As global politics and economics become even more connected, holding just one citizenship can become increasingly problematic, much like placing all of one's capital in high-risk stocks and hoping for indefinite returns. Having options for alternative residence or citizenship is more desirable locations or regions not only enables individuals and their families to be mobile when circumstances call for it, but it also allows them to deploy their wealth far more effectively than if they were bound to a single jurisdiction. Like gold or AAA rated sovereign securities, alternative residence and or citizenship is a safe haven investment with the additional benefit of providing choices for improved physical safety for high net worth individuals and their families. Acquiring alternative residence or citizenship diversifies investor risk by providing optimal protection against global economic and political volatility. Material benefits aside, investment migration safeguards individuals from being at the mercy of a single government. For instance, holding alternative citizenship of an EU member state guarantees the right to travel, trade, and settle anywhere in the EU without restriction, as well as granting access to all the benefits enjoyed by other citizens of that state. For business owners, it can also foster business expansion and expedite overseeing international operations. Alternative citizenship therefore dilutes the power that a single state can exercise over individuals, enabling them to make autonomous decisions regarding the deployment of capital with fewer restraints. As we move firmly into the 21st century, those who thrive will be individuals who are best placed to adapt to a changing reality. Expanding our notions of value and investment are key. Just as we have learned to treat our health as an investment, we must come to consider our freedom as such too. An investment in freedom and independence today will yield dividends for decades to come in terms of financial reward, improved quality of life, and the privilege of choice, not only for individuals, but for their families and their legacies too. Holding additional citizenship is in a more favorable jurisdiction is a unique means of insulating oneself against market precarity and potential geopolitical instability. Visa rules can and do change, as we know, as do governments, but citizenship is for life and can often be passed down to future generations. Investment migration programs are reliable mechanisms for reducing one's exposure to risk while unlocking valuable opportunities. Whether one is motivated by risk reduction or value creating, the benefits that accrue from having multiple citizenship and/or residence options are indispensable to whatever unforeseen circumstances are thrown our way. Wealth planning and financial services providers who fail to embrace investment migration as an essential risk diversification tool for their clients will lose market share to those who do. Given the explicit value of citizenship planning for high net worth individuals, the justification for not including it alongside more traditional wealth management products is becoming increasingly weak. Thank you.
All right, thanks very much, Juerg. So, I mean, essentially, this is about how the industry positions itself, not just with its commercial contacts, but within the wider prism of public opinion and stakeholders. But can I ask, why have you introduced this concept at Henley and Partners? And just before you do that, I think what we'll do is we'll also open up to any questions that some of the audience delegates might have today. So if you do have any questions, there's a question page on the bottom right of GoToWebinar, and you can type those in, and Juerg will address those, or if there are any questions for the IMC, we're happy to address those again. So Juerg, why has Henley introduced this concept then?
Thank you, Bruno. As you know, Bruno, I was for many years a banking and wealth planning professional in Switzerland and other countries. So I'm comfortable with the wealth planning and asset management concepts, but that's not the core reason. The core reason is twofold. One is that we want to speak to the long-term needs of the clients, and we see that investment migration should be very much part of the long-term wealth planning of each high net worth individual. Second, it is about reputation. Henley and Partners provides strategic advisory services. We do not sell commoditized products, but match the need of the client. We would hope that all IMC members do the same. Our point is for us to be taken seriously as a reputable professional services industry by the stakeholders. The catch to the above is that you have to have the right colleagues that are comfortable with this approach and this concept. They have to have the right background, obviously, and education. And you have to train them accordingly.
So I guess it also has to be almost hardwired into your human resources, the culture at the firm. Is that something that you've been working on as Chief Executive of Henley and Partners, in changing the culture within your business?
Yes, obviously we try to do that, but it's a challenge since we are very international. As you know, we have offices from Canada to Australia and from the Caribbean to China. And we bring all the colleagues together twice a year, at least the management board. So these are the 45 leaders of the company. And we do webinars as here with colleagues, Skype sessions, etc., to train them. Even so, in these, particularly in these challenging times, it is even more important that you communicate with your colleagues around the world, obviously, and train them.
So with this concept, Henley being a global company with a number of offices worldwide, what would you say are the regions that firstly understands the concept more than other regions, and secondly are more performing and performing in terms of understanding the concept that you've rolled out here?
So we have a lot of bankers in our company, or former bankers that worked in the wealth management industry, because the clients are the same. So the clients are wealthy individuals, and therefore the industries are very close. And when you go to school, when you learn wealth management, then obviously you hear about these asset classes and about these financial planning concepts. And from there, it was not a big step for us to think about investment migration as an asset class. It's just a logical next step, and actually our colleagues around the world, I would say, feel that as well as a natural future step in the wealth planning and wealth management concepts that we already know since many years.
All right. So these companies, they're global citizens. They want to avoid specific regional risks. That's why they hedge obviously their financial products as well. The COVID-19 pandemic is probably also pushing them to find alternative solutions, not only for their wealth, but also for their citizenship and residency planning. What do you see as the major risks that investment migration can hedge in this?
So, Bruno, investment migration allows the investor to take a genuinely global view and therefore avoid specifically regional risks, be they political, environmental, or financial. This means that the wealth portfolio can be as international as the individual when they have invested in an investment migration program. The programs that are backed by real estate purchase, for example, also have a natural hedge. For instance, value and yield from the property may fluctuate, but the core global mobility aspect remains intact.
All right. You mentioned political risk then. How does citizenship by investment, residency by investment, or investment migration, as it's commonly known these days, how does investment migration hedge against this political risk that you've mentioned? I think people would be interested to know that.
Yeah, perhaps the easiest is to make some examples. You will remember the terrible Mumbai attacks. I think they happened in 2008, and during these attacks, the terrorists went to the hotel lobbies and asked precisely in which rooms the Brits and the US citizens are. And after these attacks, we actually saw that many US and British citizens came to us and asked for advice because they wanted to get another citizenship, because they said they have to travel often in different areas of the world and they don't feel safe anymore, and they prefer to have another citizenship so that they can enter these hotels with a second citizenship, that people don't know that they are British and US citizens. Another example that I can remember is a manager from an international security firm. He was not wealthy, and as we ask all our clients, why do you actually look for an alternative residence or citizenship? So he told us that he is active in Africa with his firm, I think in the oil and gas industry, and that he feels also out of security and political risks, it would be better to have a Caribbean citizenship for him and work in these countries under the Caribbean citizens. And so you see, we have seen a number of clients acquire citizenship to hedge such political risk issues and continue at the same time to develop their career and wealth in this way.
All right. We've got some questions coming through here. I want to try and get through as many of those as I can. One of those is, the crisis has taught us a lot. Apart from mitigating volatility and risk diversification, moving forward, what should high net worth individuals be focusing on? Key indicators that will help come through the next crisis with as little effect as possible. Open brackets, healthcare, repatriation, and safety. So, what should high net worth individuals be focusing on or looking at as key indicators to drive through into a next crisis and avoid the effects of the next crisis or mitigate those effects?
I think you can't, it's not an easy question, and I think the wealth planning concept, the general wealth planning concept is important here. So it's not only about investor migration, about residence and citizenship planning, it's the whole cycle of wealth planning. You have to think about the future, you have to think about the next generation, you have to do inheritance planning, you have to know or to think where you want to live in the next 10 or 20 years, then tax planning is obviously important. And it depends. It depends on the children. Where are the children in the future? And then, of course, the wealth management. So that the regional, what kind of regional focus you want to have, in which areas you want to have your wealth. So it's not an easy question to answer. And each family and each individual has obviously a very different situation. What I learned, I worked, as you know, in banking for many years, and I was advising high net worth and ultra high net worth individuals. What I learned is the bigger the wealth is, usually, obviously, the better advisors the people have. And the problem is, for us humans, we all live in the moment, so we don't really think about the next 10 or 20 years because we are so freaking busy every day with our tasks. And there it is really important as an external advisor of high net worth individuals to talk with the clients about this, to talk about, you don't have to provide them solutions, but you have to tell them that this is important, because as we see now in coronavirus, in this during this difficult pandemic, things develop very fast and the circumstances change a lot, and therefore you should have a kind of a concept for the next 5, 10, 15, 20 years. And as I said, usually the very wealthy ones, they have very good advisors, and these advisors automatically come and sit together and bring the best experts at the table. But high net worth individuals with a smaller wealth, I often see that they don't want to talk about it, they don't actively think about it. And therefore, I think also from us, from the investor migration industry, it is important to start this talks with the client. As I said, we don't have to provide the solutions. We have to ask questions and then bring the experts, the needed experts at the table.
Yeah, it's interesting what this what the pandemic has created in terms of when I've spoken to bankers, private bankers, and advisors of high net worth families, they've been inundated with paycharts asking them to, dig out the trust instruments and check that everything is up to date, that the wills are up to date, and there seems to be now a little bit of a rush to get your house in order in terms of your finances and your paperwork. It's quite interesting. One other question that came through, Juerg, as well, and this latches on a little bit to what you said about planning for tomorrow today. And the question is it important as part of the mobility strategy of individuals to obtain citizenship or residency in a matter of months? So essentially doing something quite quickly. We see a little bit of advertising coming from some jurisdictions that you can get certain citizenship in 3 months, or a residency is guaranteed in 90 days, for example. So how important is it from a mobility perspective to rush through? Because in my understanding, 3 months is quite quick, isn't it? So do you want people to rush through and obtain residency and citizenship very, very quickly? How would you advise your clients in this respect?
So generally not. If we have prospects, and as you know, I built up Southeast Asia for Henley and Partners before I became the COO and CEO. So the more you advise clients, the more you get a feeling, obviously, how clients are, what are their needs, what is normal, what is not normal. And if clients come and say, I need next week or in a month another citizenship or residence, then of course automatically some red flags come up, because in this current situation it is clear that also if you have 10 or 20 citizenships, you cannot travel. So of course you can, some countries they bring you home, that's an option, but generally the borders are locked, and the airports are closed. So from that perspective, it doesn't really help you. But what we see is that we have more inquiries, and the reason for that is from our perspective. First, people realize that it is perhaps not the best idea just to have in one country a resident permit and a citizenship. So it is important to have options. We've seen that in the past, in the 2008 crisis, I was still a banker in Switzerland, as I said before, and I was advising high net worth individuals. And then I think I had 3 or 4 clients who approached me and said, I would like to buy a farm, and the farm must be far away from all humans. It must have water, a water source, etc. And actually 2 or 3, they even bought such a farm. One bought a farm in New Zealand, another one in Germany, and I think one in Ticino in Switzerland. So people realizing under these difficult times that there is a relatively big risk that everything is locked down and they can't move anymore, and therefore to have options for their families, it is actually important to have different residents on citizenships. I remember Chernobyl, so the older ones under us remember Chernobyl, and there it was the same. There I had clients who called me and said, we need a resident permit in the US. We want to fly next week to the US and live in the US for the next couple of months because we don't know how things develop. We don't believe that the governments tell us the truth. So we want a resident permit right away in the US. And so I think under these very extreme situations, people also often overreact. But for us and for the industry, it's obviously good because people realize to have only one residence or citizenship can often not be optimal.
Of course, it limits your opportunities to of global mobility, having only one residency or one citizenship. So hence why you're hedging volatility, having multiple options available to you, as you've demonstrated quite clearly. And I think what I've done there is answered another question which somebody had. What would you say, to an Indian high net worth individual who's looking for a second citizenship or a second residency outside of India, but is watching carefully the newsreels at the moment? They've seen that the US has ordered a number of a number of medical healthcare equipment from India, including masks and personal protection equipment. Europe is under a major lockdown and has a shortage of healthcare and protective equipment for its frontline workers. What would you say to an Indian high net worth individual who's looking for an insurance policy in case things go wrong in India?
I think, again, it depends very much. It depends whether the children live abroad already. It depends in what kind of business this individual is, whether he or her has has firms abroad, in Europe or in Asia, etc. But generally, what we see currently, as you know, is that in Asia, North Asia, Southeast Asia, it already looks much better. And but if we can predict from how the situation and the recovery looks actually in China and Southeast Asia, then we could predict that things also in Europe look much better in a few months. But I think generally, Indians, as you know, as Chinese, are living everywhere in the world, and there are everywhere communities of Chinese and Indians. So I think this Indian he would or she would feel very comfortable in Europe or in Asia or in the US. I think it doesn't really, it more depends, as I said, on the individual desires and circumstances.
Okay. I can see we're close to running out of time. What would you say in the next few months would be happening in the the global economy, specifically related to investment migration? How do you see the future in the next few months, the medium term effects of COVID-19 on investment migration?
I'm an optimist, as you probably know, Bruno. I see things generally positive, and also for our industry. So, as I said before, on the one hand, from the client side, the clients and the individuals realized how important it is to have a hedge, to have options, and they will see that another residence or citizenship makes sense. And the more people that do these programs, of course, the more people want to do these programs. And so, from an individual perspective, from the need, and it's just growing. And also, very importantly, obviously, also from the government side, the governments. We are in close contact with some governments in the Caribbean, and they are very much dependent on the tourism. Up to 80–85% of some of the islands in the Caribbean have, so 80–85% of the returns come from the tourism industry, and this is now zero. And so the second biggest, most important industry is investor migration. And so these small countries, they need these programs. And the same we see in Europe, in Malta, in Cyprus, when we talk with the government, they need these investments from high net worth individuals. And from that perspective, from my view, the future is bright. What is difficult, obviously, currently is that the clients can't travel, because, as you know, for all the European programs, the clients have to go to Europe, to the country, for their residence application and to pick up the citizenships, etc. So this is difficult for the next months, but in the next six months to a year, I believe, and we as the executive committee believe, that the situation should return to normality and actually help on the whole the industry.
Staying on the subject of the Caribbean programs, I had the pleasure to share the broadcast yesterday with Nestor Alfred, who's the chief executive of the Citizenship by Investment Unit in Lucia, and I put it to him that given that tourism is a major receipts maker for the Caribbean, 80–85%. Is it likely that Caribbean CIUs, Caribbean programs, will come out with heavy discounts or offers in the next few months? And his response was probably that will happen. What are your thoughts on almost what could be termed eventually discount wars, or a race to the bottom with the fierce competition that there tends to be in the Caribbean? Do you think that's
we don't think that this will happen? Excuse me, Bruno?
I was going to say, do you think that's a good thing, that there's going to be heavy discounting and a price war? Because ultimately your clients would probably benefit from that. But the wider view of the industry might be that maybe it's not such a good thing to have a race to the bottom. I wonder what your thoughts were. So
CEO. If you remember, we saw the same, I think it was 2 or 3 years ago in the Caribbean, where suddenly the prices went down. Some of the governments had these special offers in place, and we discussed it afterwards with the prime ministers, with the CIUs in the Caribbean, and at the end they all agreed that it was a mistake. So obviously, the industry is growing. Everybody sees that, and we have a fierce competition. Now we have also Montenegro. Moldova is closed currently, but Montenegro just opened, and of course more programs will come. But the solution cannot be just to reduce the price. The solution should be to look at the offering, what actually the countries offer to the new citizens, and we believe from the offering side, the countries still should think, what is actually the offering? What do we actually offer to our new citizens? Why do they want to have a Caribbean citizenship, and why is the citizenship from our country, why can it bring more to the applicants than from another country? And there we are in dialogue with more than one government in the Caribbean, CIUs, and actively try to help them to develop their programs, because at the end, obviously for us, but mainly also for the countries, this race to the bottom doesn't help at all.
Indeed, indeed, and I think the Caribbean region has so much more to offer than just simply discounts. I think once you can attract investors through as citizens or as residents, then show them what else your country can offer. And I think we will find, as one of my panelists said yesterday, that certainly from the Asian perspective, Asian investors, high net worth individuals, are looking for much more than just a new citizenship or a new residency. It's actually just a starting block, and they want to know what else can they do in terms of investments, and that's about hedging your investments, isn't it? Juerg Steffen, thank you very much for joining us on Crossing Borders, the IMC streaming service. We will have to be there. I want to inform our audience that we continue to broadcast on every Wednesday and Thursday at 2:30 Central European summertime. Please check our social media, Twitter, LinkedIn, and Facebook for updates on future broadcasts. In the meantime, I wish you all well to stay home and stay safe and stay healthy, and a very happy Easter if you're celebrating Easter in the next few days. So thank you very much for tuning in, and take care. Bye-bye.
Thank you. Good afternoon. Bye-bye.